Business today, and you're watching Ask Udayan, the show where we answer all your questions on stocks. I'm Abha Bakaya. With me, our global business editor Udayan Mukherjee. The stock market has been seeing immense volatility. We take a look at what is perhaps the best approach at a time like this, and do keep sending in those questions. The number is on your screen. We'll try and answer as many as we can every week. Let's begin and take some of our queries now. Our first question today is from our viewer Ritu Tiwari in Mumbai. Ritu, go ahead.
Hi Udayan, this is Ritu Tiwari from Mumbai. I have 100 shares of IEX. I bought it at 264, and actually I've been incurring losses for a while, so I needed to ask you and have your suggestion. Should I exit this position? Thank you.
Well, IEX is a good company actually, so I don't think fundamentally you need to worry too much. I know you're sitting on about a 15-20% loss on the counter, and that's never very comfortable. But IEX is fundamentally a good business, and as you know, since you own the stock, it's the leader in electricity exchanges with a 90% market share, and some new products and exciting products are coming on stream because derivatives have been allowed in electricity exchange contracts, trading contracts, because of the recent settlement between CRC and SEBI. And I think that opens up interesting possibilities for IEX as an exchange. Also, when the whole renewable units come on stream over the next few years, I think that will add another dimension to IEX's revenue stream going forward. And there are many good things about IEX, not just the fundamental story, but if you look at the quality of the balance sheet, absolutely pristine, debt-free balance sheet, 50% return on equity, you can't find fault with that. The stock has corrected a bit too. I mean, it was at 320, you bought at 260, and is now closer to 220. But the only problem with IEX, I would say there are two problems. One is that the last couple of years, the company has grown at a scorching pace of 35%. Now, because of the base and other factors, I think growth will slow down. We'll probably still get growth, but maybe closer to 20-22% and not 35%. So maybe the valuations need to adjust for that. But the principal problem with IEX right now is that the stock is a very expensive one. And given that the market is seeing so much volatility, particularly in the expensive part of the market, I think IEX might also struggle to outperform in the near term. So what you could do is probably even average your position if you find the stock below 200 and probably look at it as a medium-term bet because, as I said, fundamentally it remains a fairly strong business, albeit with slightly slower growth.
Sarthak Verma has a query. He's from Raigad, and this is on one of those banking stocks. Let's listen in.
Hi Udayan, this is Sarthak Verma. I bought 130 shares of Union Bank at Rs 38. Should I continue to invest in the stock for a long term of 2-3 years? Thank you.
Well, I think things are going for public sector banks after a long time. There's quite a bit of interest, as you can see in the market as well. I mean, stocks like SBI are outperforming names like HDFC Bank, and that's not happened in the last decade. So there is interest in public sector banks. There's a growing feeling that the balance sheets have been cleared, and now in the next credit cycle, as it fleshes out, you will see public sector banks actually reporting great earnings and catching up on the valuation front with private sector banks. And there might be a grain of truth to that as well. Union Bank is a very inexpensive name. I mean, I was talking about IEX just a while back, which was very expensive. Union Bank trades at half its book value, 0.5 times book, next year's book. So, you can't find stocks too much cheaper than that. They are also trying to fix their asset quality issues. There are still a couple of lingering issues with bad assets like Shrey Infrastructure and a couple of state government loans. I think some of that will need to be dragged along for a while. But broadly, a large part of the asset quality cleanup has happened, and some kind of loan growth and earnings growth is beginning to kick in. My sense is that public sector banks will probably perform as a basket. Some may do better, some may do worse. But if the current mood continues and earnings hold up, maybe most good public sector banks, of which Union Bank can be called a part, should do well. So I wouldn't worry about throwing out the name Union Bank immediately, though I suspect that SBI and Canara Bank are probably better bets from the public sector banking universe.